Okay, this is question number 421, Moston.
Mm-hmm.
Okay, this is the 25-26 edition. So it would have the IFRS 18 change in it as well. Okay, what you
Okay.
basically do when you have got an essay question is that you're going to skip everything first and then go right back to the requirements. Requirements are really important in essays. It gives you an insight of what we have to finish. Clear?
Okay. Clear.
So here they have already told you they need SOPL. See, the syllabus changed from this session onwards. So mark this question as something that would come. Okay, it's going to come.
Okay.
Going to be there
Okay.
that you have to prepare an SOPL. Clear?
Okay.
Because
Clear.
major changes are there in SOPL. Hence, you would have the question from SOPL itself. Understood?
Mm-hmm. Clear.
Okay. So you have to prepare an SOPL and OCI. Okay. Then you have to prepare SOCE and then you have to prepare extracts from cash flows. Cash flows is something that we have not yet taken. So we are going to skip the C part. Clear?
Okay. Clear.
Okay. What I want you to do is the first note. This is the information that they have given. Okay, they have given the revenue, the cost of sales, everything that they have given. And they have
Okay.
also attached some additional information in the form of notes that is being described below. Clear?
Clear.
And here, this is about research and development project. This is about IA 16. Clear?
Mm-hmm.
This is IFRS 9. Okay.
Okay.
And this is provision for tax with the schedule that we may need. Clear? And
Clear.
the fifth one is very simple. They're just telling you how much of the dividend is paid. Dividend calculation is basic. If you're not able to do it, tell me. I'll help you.
Okay.
Clear?
Okay. Clear.
Okay. I want you to read through the question, and what you do is you're going to skip a space. Okay. Maybe until
Mm-hmm.
row row number 39. And from there, you're going to give side heading as just follow the same thing. Okay, you're going to give
Okay.
side heading workings. Clear?
Mm-hmm. Okay.
Okay. And you're going
Okay.
to provide working note one. Okay.
Mm-hmm.
Two like that, two, three like that. Okay. And
Okay.
when you have an SOPL question, your working number one would always be cost of sales. Understood?
Okay.
Okay. Which you can't do now. So you're going to skip cost of sales and start with working note two, which would start with Moston commenced a research development project like that. Clear?
Clear.
Understood? No?
Understood.
So I want you to do the one, two, three, four, five if you can. Otherwise, I'll help you.
Okay.
Clear?
Okay. Clear.
Oh, start doing. FS part, I'll teach you how to do. Clear?
Okay. Clear.
First of all, the SOPL format has changed. The first items are as it is. Clear?
Okay. Clear.
Okay, that is you have revenue, you have cost of sales. Just a moment.
It's okay.
Okay. So in every question of SOPL, it's
Mm-hmm.
important that you start with the working note one, which would be of cost of sales.
Okay.
Okay. So
Okay.
here you have already been given a cost of sales as per your trial balance. This is your trial balance. See?
Mm-hmm. Okay.
Okay. And it is 88,500. Okay. And this is excluding the adjustments that you are about to make. Okay. So the first question, that
Okay.
is first note,
Mm-hmm.
see, view this as a multiple choice question. That means whatever I have taught you till now regarding the standards, you're just
Okay.
going to get it here. That's all.
Okay.
Okay. So we have done
Mm-hmm.
similar question. I mean, more tougher than this one. Okay. So they
Mm-hmm.
have told you they have commenced a research project as on 1st January
Yes.
2005. So this is the start date. Clear?
Mm-hmm. Yes.
Okay. And
Mm-hmm.
on 31st March, they have decided that this project could be changed into a development stage. Now remember,
Mm-hmm.
it is that they decided, right?
Yes.
But only on 1st May did they know this is going to be a successful one. So the
Mm-hmm.
criteria that is met would actually fall under this particular date. Sorry, not this one,
No, no, yeah,
this
it's
particular date.
May, June.
Yeah.
Mm-hmm.
So from 1st January till 31st March, this is a research project, so it should be expensed. Now look at the
Mm-hmm.
calculation. First 3 months, it is 1 million. I mean, how much is it? 1 million per
Uh,
month, right?
yes.
So
So 3 million
taking
for
three
three
extra
months.
zeros. Okay, so 1,000
Mm-hmm.
into 3
Mm-hmm.
plus the fourth month, it becomes 1,600, 1.6
Mm-hmm.
million. Clear?
Yes.
Okay. So from 1st May onwards, this whole thing becomes capitalized, that is 1,600 into 2. So this is
Yes.
your correct working. Understood?
Okay.
Clear?
So far, yeah, so far this is exactly what I did, but in a different format.
Okay, no problem. Now, from the current non-current asset question, whatever you have done till now, you're going to do exactly the same thing. You're going to have two
Okay.
columns for property and plant and machinery. You're going to start with opening balance. Clear? And the
Mm-hmm.
opening balance of property is already given to you in the question in the trial balance version, that is 28,500. And
Mm-hmm.
for plant and equipment, they have given you the cost. You're going to deduct cost minus the accumulated depreciation to get the opening balance. Clear?
Mm-hmm. Clear.
After that, for property, they have revalued it again on 1st July 2004 to 29 million. Clear?
Mm-hmm.
And so the revaluation gain becomes 500 here. Clear?
Okay.
And after that, you do the usual thing. You're going to find the depreciation, which is by 15. Clear?
Mm-hmm.
And then you're going to take the carrying value. Here as well, it is into 15 percentage of the opening balance. Clear?
Mm-hmm.
You've
Clear.
got the depreciation now. You're going to take the depreciation onto the cost of sales. Clear?
Okay. Clear.
Okay. So the cost
Okay.
of sales part is done.
Okay.
Simultaneously do everything.
Okay.
Now on the fourth working, which is the third note, is about loan notes, right? So loan note,
Mhm.
we have the opening balance. We have to find the
Yeah.
opening balance, that is the nominal value minus the issue cost. Clear? That is 19,500. I'll just change here.
Mm-hmm. I did nominal value times the finance costs.
Yeah, that is cash paid, right? So we have the opening balance
Okay.
since it is taken on 1st
Mm-mm.
July 2004. There is only 1 year. So
Mm-hmm.
1 year, okay?
Okay.
And then you're going to take the opening balance here, okay? And
Mm-hmm.
then they have already told you the estimated interest is at 8 percentage.
8%. Mm-hmm.
8 percentage. You're going to deduct 20,000 into 5 percentage and then the closing balance. Clear?
Clear.
Okay. So that part is done. Now the tax part, it is relatively simple. You don't have to create the detailed schedule. It is just this schedule that you need. That is the current tax estimate plus the increase in detail would give you the tax expenses for the year. That should be taken in SOPL. Clear?
Clear.
Now, the last working, that is of dividend, they have already told you the dividend was paid before the share issue, right? So this is 2005 balance. So whatever shares that they have shown here includes everything. That is the new issue as well. Clear?
Okay.
They have clearly stated that they have issued 10 million equity shares, right?
Mm-hmm.
So 10 million equity share means what was the shares before? It would have been 20,000 shares. Clear?
Clear.
Okay, so 20,000 into zero point 0.2 would give you the dividends that was paid during the year. So you know the additional share that they have issued is 10,000, right?
Mm-hmm.
But they sold it for $1.7. Clear?
Okay.
That means they got zero point 0.7 extra because $1 is the nominal value or the face value. Clear?
Clear.
$1 would go to capital and the remaining $0.7 would go to share premium. Understood? And
Somewhat.
see, 1.7, right? Out of
Yeah.
1.7, 1 is the share capital because it is the face value. It is the rule that the face value only should be transferred to capital. Clear?
Okay.
So into 1. That
Okay.
is 20,000 into, 10,000 into 1. Clear?
Okay. Okay.
And for the share premium, 10,000 into 0.7. Clear?
Okay. Clear.
This is the sum of these two things together. Clear?
Mm-hmm.
That goes to bank. Understood?
Understood.
Okay, now complete. Complete.
What do we do next?
I mean,
Okay.
have you done all of these?
Yes, except for the dividends and the tax. I got confused.
You have the Excel sheet with you, right?
Yes, yes,
Mine.
in front of
Okay.
me.
Open
Yes.
it and complete yours.
Okay. Oh, sorry.
So 13,500.
Mm-hmm. Cost of sale,
500
what we
cost of sales.
sold.
You just have to paste
Yeah,
from here. Clear?
yeah. And then we subtract revenue from cost of sale, but because we have a negative, we're just gonna put plus.
Wait. Yeah.
Okay,
Okay.
and then for distribution, I placed
I've given
2,800. Yeah,
right?
yes.
And for administration
Admin,
cost
6,800 from the TB, right? Or no?
from the TB, as well as they have mentioned here somewhere that the interest should be taken to administrative cost. Clear?
Okay,
That
clear.
sorry, the issue cost. Sorry, not the interest. Sorry, sorry,
Mm-hmm.
sorry.
The issue cost.
500,000 should be taken to administrative cost. They have clearly mentioned that.
Mm-hmm. Okay.
So you're going to take the administration cost of how much? So it's
6,800.
100 plus you're going to add 500 to it.
100.
Clear?
Okay,
And
clear.
everything should be negative.
Negative. Mm-hmm.
Clear?
Clear.
Okay.
Mm-hmm.
Now you get the operating profit. Oh, there is no all plus in this. Clear?
Clear. Okay, for investment income, I placed 300 directly from the TB.
Yeah. It's 300 directly. See,
Yeah.
the change in the SOPL doesn't really affect you. You need to have common sense. That's all. Clear?
Okay.
Investment is directly given to you in the TB. So you're just going to take that. Clear?
Clear.
And after that, what you get is after that, you get your profit before financing and
Financing.
income tax. That
Mm-hmm.
means you haven't charged interest, you haven't charged
Mm-hmm.
taxes. Clear?
Mm-hmm.
So
Clear.
you're going to charge just that. So this is equal to what was the interest charge that you got? Are you going to take the 500,000 here? No, you should always
No.
take the estimated interest. Understood?
Why estimated interest and not the closing?
Why closing? It's not interest that we calculated, right? See, the point of view is that whatever we are showing, it should be true and fair, right?
Okay.
So this particular 1,000 is not just it. Clear?
Okay.
That means the prevailing market rate is going to be 1560. Clear? So that is the logic behind taking 1560 as the interest charge to the income statement. Understood?
Mm-hmm.
Okay. Now,
Okay.
the reason that we're taking cash paid is that we're paying 1,000 per year. So that means it gets deducted from the overall balance. That's all. Clear?
Okay, clear.
Okay, this is how we do the IFRS 9 according to what the standard says. That's all.
Okay,
Nothing major. Don't put too much logic into it. It's just that IFRS 9 tells you that only estimated interest could be transferred to the profit and loss, and the other cash paid, that is the normal interest that you pay, is to be deducted from the total balance. That's all. Clear?
okay, clear.
Now you're going to give the tax expenses which you have already calculated,
Yeah.
well, which is here. Clear?
Mm-hmm. Clear.
Then this plus this again. Clear?
Clear.
Okay. Now the
Okay.
revaluation gain also already calculated. You have it right here. Clear? So the total comprehensive income is this
Okay.
profit plus the revaluation gain.
Okay.
Understood?
Yes.
That's all. Easy, no? Because this is
Okay,
an easy
yes.
question, okay? This
Okay.
is very easy.
Okay.
It's just making you getting used to the SOPL. That's it.
Okay.
Clear?
Mm-hmm.
So SOPL part is done. Let me check if it is correct. Hmm, okay. This plus this plus this. Hmm, somewhere we messed up. This
Administrative cost. Oh, but you should
300.
subtract, not, yeah. Okay.
Okay. 300. Operating profit is
No, it's still there's still an issue with administrative expense. Um, because over here it's 6,300,
yeah, yeah.
but over here, yeah.
Okay.
No,
Okay.
again, still.
Equals the administration cost is how much? Let's just
But in
do
the TB, it's 6,300. Why are they saying 6,800?
the TB. Let me see.
Administrative, yeah. 6,800. Yeah.
1,800. Okay. And they
Mm-hmm.
have clearly told you 500 which have been charged to administrative expenses.
Mm-hmm.
Clear?
Clear,
We took that expenses from administrative cost and we have calculated IFRS according to IFRS 9. Clear?
clear.
Okay. So
So
this,
it's correct. So it should be 6,800 minus 500.
yeah, the simple logic is that it shouldn't be there. Clear?
Again.
The simple logic. The
Okay,
500,000 issue cost according to IFRS 9, it should be taken with opening balance. Clear? And
clear,
everything adjusted is what we calculate as 1560. Clear? So this
clear.
becomes an issue of double counting. That's all.
Mm-hmm.
Clear? I'm
Clear.
repeating again. They've told that the 500, that is the issue cost, was actually charged to the administrative cost. Clear?
Clear.
But when we studied IFRS 9, did I ever tell you that the 500 should be expensed? Did I?
I don't recall.
Okay. Go back and watch the video,
Okay.
right?
I
So,
still didn't finish IFRS 9.
yeah. So issue cost is supposed to be adjusted with the opening balance and not to be, taken anywhere in the SOPL. Clear?
Clear.
Okay. So the
Okay.
6,800 that they have actually taken the issue cost along with it. So we have to bring it down because the issue cost is something that we adjust with the opening balance. Understood?
Understood. Is it the interest expense?
Yeah, and no, it
When
is
you
not the
said,
interest expense, but the logic is that when you take the opening balance, you take off the issue cost and then you reach the opening balance. Clear? That
clear.
means you are taking the nominal value, you're deducting 500 from it, and then you're going to reach the opening balance. That's all.
Okay, okay.
Understood?
Understood.
Okay, so it shouldn't be taken to SOPL. That's the basic rule. It's an IFRS rule. Clear?
Clear.
They have wrongly taken it into the administrative cost, which we corrected now. Understood?
Okay. Understood.
And after that, we get the operating profit, sorry. Okay.
Mm-hmm.
And then we add investing income into it, and we get 7,000. Then we deducted the interest charges that we calculated just now.
Mm-hmm.
So the profit before income tax becomes 5440. Then we deducted the tax expense and we reached 3440. Clear?
Clear.
Understood? Now,
Understood.
the revaluation thing. What's the issue with that as well? Let's see. In the working note 1, they've told that, not in the working note 1, this one. No depreciation has yet been charged on any non-current account for the year ended 30th June 2005. All the depreciation is charged to cost of sales. That's not an issue. Okay, here. Moston does not make an annual transfer to retained earnings in respect of the revaluation surplus. Ignore the deferred tax on revaluation. So they have already given you, there is a revaluation surplus of 3,000, right?
Mm-hmm.
Okay.
Yeah.
So in the
Yeah.
question, they have already given you a balance. Understood?
Mm-hmm.
Okay, so from the balance, you know that the revaluation gain is how much? Is how much? That is the 29,000 minus the 28,500. Okay,
Mm-hmm.
minus in the working note 1.
Yeah, the property at
Yeah,
valuation, 1st of July.
we'll go to our own one. I'll just pause the recording. So we slightly misread the question, okay? In the question, they
Mm-hmm.
told you that the revaluation was taken on 30th June 2005. Understood?
Mm-hmm.
But I wrongly took it as it was taken on 1st July 2000.
Okay.
Clear?
Clear.
I'm just going to correct it. We're going to add a row below. Okay. So carrying value at fair value, okay, on 30th June 2005. Okay. They took
Mm-hmm.
the, what I did wrong was that I assumed it was on, they have clearly
July.
told you it was not to be assumed. Clear?
Mm-hmm.
They have clearly told you on 30th June 2005, the fair value was how much? 29,000.
29,000.
Understood?
Million.
Million. Okay.
Mm-mm.
29,000,000, 29,000. I'm taking
Mm-hmm.
3 zeros extra.
Okay.
Okay. So the depreciation is going to be the opening balance divided by 15, right?
Mm-hmm.
So that is the carrying value is this much. So what would be the revaluation gain? That would be this divide minus that one. Clear?
Clear.
And this is going to get transferred to where? We're going to take it. Oh, I have. Okay. We're going to take it in the OCI. Clear?
Mm-hmm.
That's where we went wrong. Understood? Now it is correct.
Understood.
Understood? No?
Yes.
It's not too much. We have to read the question carefully. That's all.
Mm-hmm. Mm-hmm.
Clear? Now
Yeah.
prepare the SOPE or SOCE of Moston and Company. SOCE is relatively very simple. You're going to take the opening balance. Okay. Mm,
Okay.
they have given you everything. That
Okay.
is, they've given you the share capital. We're going to write, I'm just going to show it from here. Okay. You're going to
Okay.
take the share capital. other components of equity, revaluation surplus, retained earnings, and total equity. And this total column is just the horizontal total of all of these things. You have been in audit, right?
Yeah.
This is the exhibit C that we use in audit. Understood?
Mm-hmm.
You remember?
Nope.
Okay. So this is the SOCE. So in SOCE,
Okay.
what we do is you're going to take the opening balance. Now, about the opening balance, this is going to be 20,000. Why? Because the 10,000 was issued during the year. Understood?
Mm-hmm.
Clear? So
Clear.
10,000 was issued during the year. So 20,000 is the opening balance of share capital. Understood?
Mm-hmm. Okay.
And other components of equity, they have revaluation surplus, they have the opening balance here. Retained earnings also, they have directly given you the opening balance. Clear?
Clear.
Okay, where is the other components of equity? They have not. I'm just going to mark the SOCE components, okay?
Mm.
So we want this one,
Other components of equity.
this one,
Mm-hmm.
and this one. And you're going to straight away take all those values as balance at 1st January 2004. Clear?
Okay. Clear.
And then you're going to total it together. Okay.
Okay.
And this year, you have given shares, right? So
Yes.
10,000 here, and we have calculated instead of share premium, they have used other components of equity. That's all.
Mm-hmm.
Okay. So share
Okay.
premium is 7,000, this one that we calculated. Clear?
Okay. Yes.
And then you have the total comprehensive income that you should transfer, right? That is 2,400. This is other comprehensive income that you should transfer, not the total. Clear? Because total is the
Okay. Just
profit.
a second. No, can you please repeat for
Simple, simple.
um,
Have you understood till here?
yes.
Okay.
So far, so good. Yeah.
Okay. You have the total comprehensive income, right?
Mm-hmm.
Out of that, the revaluation part would go here.
Okay.
Revaluation surplus, under revaluation surplus. This is the same thing that I taught you while studying IAS 16. Clear?
Okay.
Now,
Got it.
the other part is your profit. So profit would go under retained earnings. Clear?
Mm-hmm. Okay.
And then you're going to total horizontally. Okay?
Okay.
Now, important thing. We have calculated dividends, right?
Yes.
So dividends are paid once your profit has been calculated. Understood?
Understood.
So dividends are going to be taken from retained earnings. Understood, no?
Mm-hmm. Okay.
Okay. Watch the entire video again.
Okay.
Okay. So dividends are paid from the retained earnings. So you're going to deduct that as well. So the
Okay.
adjustments are done. Now your duty is to total every column together. Clear?
Clear.
Okay. Now the part that isn't shown here, I'm going to say that as well. So when you prepare SOFP, your SOFP balance of share capital would be this one. OCE would be this one. Revaluation surplus would be this one. Retained earnings would be this one. Understood?
Mm-hmm.
For current year balance. So these are the current year balances. That is balance at 30th June 2005. Clear, no?
Okay. Clear.
I want you to prepare SOCE on your own since SOPL we have done together. Right?
Okay.
Clear?
Okay.
If
Clear.
need be, watch the video again.
Okay.
Okay, Sarah? And
Okay.
for the cash flows part, we'll be taking that soon, inshallah.
Okay, inshallah.
I'm not going to touch that because it is a standard by itself, which we have not covered yet.
Okay. So
Okay.
we have this remaining and the ratios.
And two more standards, four standards and consolidation remaining. Five topics.
Okay.
The two other standards would be taken in one class. Cash flows would be taken in another class.
Okay.
Ratios would be taken in another class, and consolidation we need 2 to 3 classes.
Okay.
Clear?
Fine.
By next month,
Okay.
midweek, I think we would be done.
Okay, inshallah.
Okay, inshallah. Tomorrow
Okay.